Hello everybody, thanks for visiting my channel. For anyone new to this channel, my name is Tanveer Chowdhury. I'm a certified financial planner and real estate investor, and I make educational videos regarding wealth building, financial planning, and real estate investing. I make one fresh video every week. You can visit my channel and you can find videos about different financial planning and real estate investing topics. Before we get started, if you think you learn at least one new thing from this channel, all I ask is to subscribe to this channel so more financially savvy people like you can benefit from this information. Topic of today's video is 10 hacks of first home savings account. You can watch the 10 rules of first home saving account by watching the video linked above. Hack number 1 is $40,000 extra RRSP contribution room. If you are not planning on purchasing your first home, you should still open first home saving account and contribute $40,000 over 5 years. And then let money grow tax-free within the first home savings account. After 15-year, transfer the funds from first home savings account to your registered retirement saving plan or registered retirement income fund, depending on your age. Transfer automatically creates extra RRSP contribution room worth $40,000 plus 15 years of tax-free growth. Hack number 2, that you don't have to have new funds to contribute to your first home savings account. If you already have funds in your RRSP, TFSA or non-registered account, you can transfer existing RRSP or tax-free saving account funds to your first home savings account. When transferring funds from non-registered account, any capital gains you might have will be offset by the tax deduction you will get when contributing to first home savings account. Hack number 3 is you can use RRSP first time homebuyer plan and first home saving account at the same time for the same qualifying purchase. Current withdrawal limit for RRSP first time homebuyer plan is $35,000 per spouse for the total of $70,000 between both spouses. Whereas current withdrawal limit for first home saving account is $40,000 per spouse after 5 years and $80,000 between both spouses after 5 years, for the total of $150,000 after 5 years. If both spouses are in 40% tax bracket, they will also be able to receive $60,000 tax refund over 5 years, which they can either use to add to their down payment or recontribute back into their RRSPs if they have the contribution room to get additional $24,000 in tax refund over 5 years. Hack number 4 for first home saving account, that there is no 90-day rule on withdrawals. Under the current RRSP first time homebuyer plan, funds have to be in the RRSP account for 90 days to be eligible to use as a down payment. Whereas with the first home savings account, funds does not have to be in the account for 90 days. You also don't have to make repayments after withdrawal back into your first home savings account because withdrawals are completely tax-free. Whereas with RRSP first time homebuyer plan, withdrawals are not tax-free forever. So you have to make repayments back into your RRSP plan over 15 years. Hack number 5 is for pre-construction home buyers. One of the rules of first home savings account is that you have to have a written agreement to buy or build a qualifying home before October 1st of the year following the year of withdrawal. And you intend to occupy the qualifying home as your principal place of residence within 1 year. You can make withdrawals from your first home saving account either in lump sum or in multiple payments. But account must be closed by December 31st of the year following the year of first withdrawal. This is good for pre-construction buyer if they purchase the home this year and make gradual deposit payments to the builder until October 1st next year, and then close the account by December 31st next year. They must occupy the home within 1 year after October 1st next year. Hack number 6 is for real estate investors. If you already own a home you don't live in, which means you rent it out, you may still be able to qualify to open first home saving account to save for down payment for principal residence, and withdrawal will be considered qualifying withdrawals. Hack number 7 is for people with disabilities. If you or your relative is eligible for disability tax credit, you do not have to be a first-time home buyer. To use RRSP first-time home buyer plan or first home savings account, you must intend that you or your relative with disability must occupy the home as their principal place of residence within 1 year after it's purchased. Hack number 8 is for business owners. Most of the business owners with corporations do not pay themselves salary but pay dividends only as a tax planning tool, which also means they do not contribute to Canada Pension Plan and get no RRSP contribution room, and money left inside the corporation becomes their retirement plan. If business owners do not own a home, they can open up a first home savings account. They will get $8,000 of contribution room per year for 5 years. Then they can pay themselves dividend from corporation and contribute to first home savings account, and then transferred first home saving account funds to their RRSPs to get free $40,000 of RRSP contribution room and save for their retirement. Hack number 9 is for the low income retirees. I don't know if you know this, but the high tax Canadians are the low income retirees. If you are over 65 and eligible for guaranteed income supplement, which means you have a taxable income of under $28,000 as a couple, guaranteed income supplements gets clawed back 50% of every dollar of income you have over $28,000, so you are in 50% tax bracket. If you have income of over $28,000 and you do not own a home, you can open up first home saving account and contribute $8,000 per year before the age of 71. And you can reduce your taxable income by $4,000 and increase your guaranteed income supplement accordingly. Hack number 10 is you can gift money to your adult children to contribute to first home savings account. If you are a parent, you cannot contribute directly to children's first home savings account, but you can gift $8,000 per year to your adult child so they can contribute to their first home saving account. Since there is no gift tax in Canada and no attribution arises when you give cash to your adult child to contribute to their first home savings account, adult child receives the funds tax-free and contribute to their first home savings account, gets the tax deduction and receives the tax refund if they have the taxable income. By doing this, you are able to reduce the size of your estate as parent for tax purposes by gifting money while you're still alive and able to see your child enjoying the gift in your lifetime. If you think information like this can benefit someone, please share this video. Also like, comment below and consider subscribing. Thanks for watching and see you in the next video.